Time now for an in-depth look at the market news this afternoon, and for that I'm joined on the line by Dr. Kim Seiwan, Professor of Economics at Ewha Women's University. Professor Kim, thank you so much for coming on today.
Good afternoon, Devin.
Well, stocks in the U.S. have been up and down this week. Overnight, they recovered most of their losses from Tuesday. What's the story in the global markets?
Yes, United States is approaching a milestone in coronavirus pandemic as all 50 states have now begun reopening. In retrospect, the shutdown was an inevitable measure to curb the contagion, but it gave a huge loss to U.S. economy and global economy too. So reopening was a long-awaited good news to Wall Street. Dow Jones Industrial increased by 1.5%, and Nasdaq also increased by 2.1% yesterday. Due to this warm breeze from United States, European markets also increased around 1% level yesterday over London, Paris, and Frankfurt's market.
Well, the KOSPI here in Korea is up today as well, breaking through the 2,000-point mark for the first time in 3 months, which, of course, was before the coronavirus situation really had its impact. What's the story there?
As expectations on U.S. economy is turning to positive in today's Korean market, the market also had a positive momentum, and it is led by domestic individual investors' active purchase. In morning trade session, actually, KOSPI temporarily exceeded 2,000 level, which is the KOSPI before the coronavirus outbreak. In today's market, KOSPI had 0.4% daily return, and Kosdaq had 1% daily return.
Well, now, turning to some other data, the producer price index for April continued to decline, carrying on from the 2 previous months. Explain for us why that is and what it means.
Bank of Korea announced that April's producer price index decreased by 0.7% on a monthly basis and 1.5% on annual basis. This producer price index drop is simply the largest drop in history starting from 1965. So it is pretty sure that this deflation in producer price level is generated by weakened domestic demand and oil price drop. Decreased price level in both producer level will spread to consumer price level in next 2 to 3 months. So we should be watching these 2 price indexes, producer price level and consumer price level closely, because that could be an important signal for upcoming long deflation.
Right. Well, we see now that Korea's exports in the first 20 days of May were down 20% from the same period last year. Tell us a bit more about that and also your outlook for exports.
Korean export is quickly declining after COVID-19 outbreak. According to government's calculation, this month export decreased by 20% compared to the same month last year. This is kind of understandable situation because Korea's all major export partners like U.S. and Vietnam are in trouble with COVID-19, and they shut down many of their production and imports from Korea. The hardest hit industries are automobiles and petrochemicals. So in the case of automobile, export decreased by 59%. That is almost 60%. And petrochemical export decreased by 69%. But on the other hand, the largest export item, semiconductor export, has been increased by 13% this month.
Now, the big story yesterday was the Korea Development Institute downgrading its forecast for Korea's GDP growth this year to just 0.2%. Hope there that maybe it won't fall below 0. What's your view, Professor?
KDI, a state-affiliated think tank, has presented economic growth outlook with positive 0.2% this year and rebounding 3.9% next year, 2021. KDI's economic growth outlook is in sharp contrast to private institutions and international organizations whose economic growth outlooks remain in negative level. But it should be pointed out that KDI's economic growth outlook is based on the assumption that global economy will decline only in the first half of this year and then recover from the second half. But I have to say that not every economist agrees on this KDI's assumption. The majority of economists is saying that it would be very difficult to bring out recovery during the second half of this year.
So a bit too much on the optimistic side there, perhaps. But Professor Kim, thanks so much for coming on and sharing your insights today.
My pleasure. Thank you.